got the euro dollar on a 5-minute chart, and I'm using a 20 pip grid on these big blacks, and the dotted line is the 5, and the 10 pips the skinny guy. So this is my day trading setup for the euro dollar that I typically run, and you can have hotkeys that get in on stops, and the spread here is a half a pip, so this is pretty decent. And you can do a hotkey entry, or you can do a hand place. Now, I typically trade a little more dangerous, so I trade a hotkey. So in the instance of it's climaxing up here, I'm either selling at the market here, or I have sell stops. So as the market's climaxing here, a 5-minute chart, which means this is like 15 minutes of pullback. So if you're really bullish on this puppy, and of course with a 5 pip stop buy at the market, you nearly have to have 5 to maybe 8 pips at the market looking to make this much. Or you have, it's going up, you don't want to chase it, and you could put a buy stop here. Or you could put, you can have a script that drops a blanket of buy limits below here that lasts for, say, an hour max. Same thing here, and notice the respect the market has for the 20 pip handle. I have my bouncing zone up 20 pips. A lot of people are happy to make 20 pips. I know I am. And that's good. And even for the sell guys, you know, wow. And this bottom becomes a top on the 5-minute. Sell limits in here, and a lot of trading opportunities on the 5-minute chart, and they happen quite often. In this whole meltdown here, I was trading coming into Friday. We had another sell-off in the euro, but as it's coming down here, you can draw a perfect trend line, and there's your break of the trend line, the first attempt for the bulls to leave the 20-yard line. And this is without regard to whether this is 100 pips. You're only thinking in terms of, I'm risking 10 to make 20, and even less, 5 to make 10, 4 to make 8, all that kind of stuff. Wonderful trend line here. It's going to resolve. We're either going up or down. So even if you had buys, you didn't get filled, and here you take advantage of the south side. I was South Side Johnny. I don't know, it makes me think of some gangster thing, but so I'm always thinking about how can I make 5, 10, 15, 20 pips all day long. And right now, this was the last trade I did was here. I bought here and I got out here. I could have bought here and got out here. And this was actually the close of market. And of course, some people are probably long from way back with a big monster stop down there. But just in a day trading situation on the 5-minute chart, just so many killer opportunities, and in this situation you don't have to be so right, because if you're running 4 and 8 pip stops, when you get filled on the south side here, you're already up. You've already made your 15 to 10 to 20 pips there. And not to say you can't buy this 20 pip, but just placing order grids now. You can also have a script that lays in buy limits at every 20 pips, and just have that on one key, and it just lays in a bunch with, say, 8 pip stops to make 12. Now, they're not all going to fill, but at least you feel like you're trading. Even placing an order is technically it's trading if you place a sell limit up here, because you are exposing yourself to potential risk. This being the entry, the stop, take profit. Market comes up, comes down. So if the market's always doing these kind of things, there's money in all this stuff. As it quiets down, a lot of people, when the market's like this, they're like, nah, not for me. But these are decent. You know, this is 20 pip bounce off the 20 to the 20, plunges through the 20 here. But that is about a 20 pip move there. But if it's not actually respecting this no more than it respects a Fibonacci handle, it is really about this bottom becoming a top and having the foresight to put in sell limits. If you really are You know, it's like the trend's down now. Of course, these trends on the 5-minute chart go in and out of phase all the time. And this thing here where it's struggling to retrace, and people are probably targeting a retrace to there. If we don't make it, and we have to keep making new lows, it's like, well, on the 5-minute chart, if you're placing an order every 5 to 10 minutes on the sell side of that, or you're selling at the market, and you just keep going, you know what, that's the worst rally I ever saw. You just keep selling into that. As long as you're trading a lot of orders, you're going to make money on that move. And it's not over trading if the market keeps poking in and filling you. Comes up, fills you on this bottom, became a triple top. So the 5-minute chart, a lot of people don't want to deal with this chart, but this is seriously where all the low risk money is. Bottom becomes a double top. Bottom becomes a double top. Bottom becomes a top. Bottom becomes a top. First failure, bottom becoming a top. Now, we could still go lower on Sunday, but now it's going to be about how's it going to take these guys out. Typically, the situation is it takes it out, rips it back. So if you're not long, you know, putting a buy limit here and buy limits tear us down, or sells up here in front of the market, a lot of sellers are going to come in there. So how much of a move can you get out of that? Maybe it pokes up here and comes down here, and maybe that's the trade. Here's your exit. That's it. But you can trade it from both directions on most brokers around the world. So even though you're long, you can still be short, long, short, long, short. And as long as you got maybe 8 to 14 pip stops, you're doing okay. You're doing fine. And this is certainly the trade everybody wants. Of course, when you fall through this level, if you look left on a larger time frame, you can see it's a key. Well, it's a key. You're making a big new. You're cutting into like 3-month prices here. But the rally just before that, if you're looking to get in on the setup into that before it happens, it's a cheaper way to get in for the sellers. Or you're just putting a sell on this fractal here. But if you take all those different styles and combine them for your entry, then I think you're really cleaning up, because you're not only getting in on the guy. You can get in say 5 different styles and 10 different ratios of risk, and that's really the best way to think about it. Because even the guy that buys this bounce for this, a couple pips, but if he's constantly thinking, you know what, this is a terrible rally, we didn't even make it back to this, which a lot of people were hoping, and you can just see it's drifting. It doesn't take too much to see it's drifting. Of course, I don't like to sell when it's this late in the game, because you can just see it's getting less follow through to it. But this is the last leg in a giant sell-off going way back on the euro. So when you switch gears here into the other time frame, this is when it becomes terribly apparent that the 20 pips, the style of entry on a 1-hour chart, is completely different than the style of entry on the 5-minute chart. And this is the difficult thing, is to pick a time. When you change time frame, it depends. It changes how you get in. So if you're a stop entry guy from the standpoint of getting in on new lows, and so you take this down, and since it's a 1-hour chart, and this is the beginning of the day, buying at the 20 for a 20 pip bounce here worked out on limits. And stop entry, if you're going to stick to a real mechanical trading system, you bought this, you had to have at least a 15 pip stop in that order. And if you're looking to make 15, so it's a break even thing. That's why I think it's better to trade that style, but also, and of course this may be too many pips per hour. In other words, this is only a 13 pip 1-hour thing, so sell stops here with buy stops here, lower risk, bigger reward for the sells. Same thing here. Under a 10 pip 1 hour. Buy stops, sell stops. You got trapped here. And if you didn't get stopped out, you made the money that took you to here. And if you were along here and you got stopped out, then you got to consider that hopefully you got stopped out here, but this guy made enough money to make up for it. Then this volatility here is kind of outside the parameters of stop entry. As far as I'm concerned, when you get a bar that's over 10 to 20, 30 pips on the 1 hour, you have to step back. This plunge here, unless you're already short for this plunge, it's a little too late to think about. Maybe you go to the 5 minute during this phase, or even the 1 minute, or or you've had the sell stops pending here for a long time, and you're just one of these guys that gets in here. I can't say that it didn't stop you out because I can't see inside of this. But if you were along for the ride, or you put a protection there after you're filled because you realize, oh boy, that's what, or you had, I guess, in the real world, you've got a sell stop there and your protection's got to be here. So you're risking that much to make. And it's really just, those are break-even orders because you made it to your target, or maybe you tighten the stop off after you entered here. But right now, the first time we poke and make a higher high, it's going to be a big deal, and it's going to pick up some, just like here on the 1 hour, it never makes a higher high till here, and you're picked up in the stream for a ride to here. But this is kind of dicey because this is a big candle. So big candles are a little scary, just because now you've got to adjust your pip risk there. If you zoom out, I don't like to zoom out any further than this. Take a look back from the 1 hour perspective. This is back in a real quiet zone. There's plenty of pips to be made during this whole phase. All these swings in here, but when this level is taken out, it's a huge problem. And if you're buying that on tight stops, they just wash you out. But if you also have the sell side of this, and the key support here was this bottom to here, and we never made it back to here. So if you didn't get short on the break of this trend line, you can do a trend line right here where a bottom became a top. If this is the trend line, everybody's long, looking for the breakouts of this continue up. Right here is where this 1, 2, 3, 4, 5 touch becomes the top, and that's it. It's over. There's a failure swing up into this where everybody's keyed off of this as your trend line plus here, and that's why if you have a bunch of sell orders, sell limits there, but this is one of those moves where unless you've pre-planned for a 300 pip drop, you're probably taking profits here, but you still did good. Especially if you had a stop here, stop there. And even along that way on that plunge, although I'm not a big fan of just placing a bunch of sell stops out in front of here, you get picked up because unless that thing cuts through with abandon, which I guess you could kind of see it coming. Here is the trend line that became, the support became resistance here, and this is kind of a big 1 hour wait to put a sell stop. So there's actually up in here is the shorter, there's a place to put a sell stop there and break out of the 1 hour. But yeah, coming into Sunday night, it's going to be just a matter of we're all the way down here now. I'm always thinking of putting some buy limits down here, and buy limits here, and buy limits here in the initial phase there. This is a little bit too overbought to buy now. No sense in chasing it. It looks like it's in the phase of retrace right now. So on the half hour, which is the big shift between half hour and 1 hour and all 15, it's big. Doesn't seem like much, but it's definitely. I think it's big. Half hour is a whole different world. Because this is the half hour chart, wow, and and get less risk from the standpoint. Look at hardly a higher high and plunge into here, so the buy stop fills here were great. If you just had it is possible, I suppose, to launch a buy stop bot that just keeps launching, keeps putting in buy stops on a plunge. It only got trapped here. Never made a higher, here a little trap here, never made a higher high, and or a low. The highs got lower. That's the most confusing phrasing I've ever heard, and I think you can see it visually. You don't have to nearly describe that. I guess I'm just trying to keep up with the latest nomenclature. No, I mean, that's how people talk, you know. But I think it's obvious what the problem is stuff like this. This is always a brutal mess for this situation. That's a problem for the when you like to have the market go like this. I think this is why they say the market's rigged, because of these moves. But these are great money makers if you are a sell high buy low guy, because that thing's all over in a couple minutes and you actually walk away with money a couple hours. Right, so I'm on the I'm going to go to the 15-minute chart, and once again, it's a whole different mindset here. But if you are running the 15 in the rear view mirror and the 1 hour and the whatever, the 4 hour, but it really it's okay to sit there now. I put up the daily just to see where this fits in the big picture, and it's quite astounding where you're at in this thing, and you can just see what a mess it is, and all these sell-offs that you see like this have incredible bounces, or they keep tanking. Like here is a pause and close for a little bit, and then wow, just obliteration. But I'd have to say, in the big picture, you're all the way back to the weekly fair value here, so you're right back to this last known top. So this is either accumulation phase, or this is going to be one more redistribution, and then they're going to mark it down again, and you're just going to go all the way down to, of course, it really doesn't matter for the scalper so much, but you know, if you are projecting, and of course a lot of people, you can't resist, I guess, throwing in the channel there, and then this would be the ultimate projection. Of course, this is if the you know, the country, I guess the euro dollar. So you're really projecting, and of course if you do this, you're going to always have to go for the chart shift to predict the future, and you can drag this little when you get this little triangle here, you can drag that over and you can project way out in the future. So it would look like this. The scenario is that, you know what, that is the top. We are going down. It would be pretty amazing. It would put you down at, if that's true, and if you truncate the price pulse here, you're making a time price projection down to, say, 80 cents on the euro. So well below par, and that's the long-term projection. And from the trend line break standpoint is, if we don't hold this, we've already broken this trend line, then we're starting to creak through the doorway of plungeola. So that really is, you know, from the scalper standpoint coming into Sunday, it's going to be about things like, hey, you know what, I'll buy it here for a 20 pip bounce. But when you look in the window of, and you can do this just by fixing the scale. If you fix the scale, you can navigate the price and see what a long-term trader may be looking at. That's all well and good, but in the meantime, how do you make some money? And that's why I'm always looking at, of course, you can have this as your, you know, I don't think we could plunge another 150 pips. Of course, you never know. I mean, over the weekend, we could gap down. I've seen it when the euro was getting punished on this whole plunge here. I was seeing a gap open on Sundays here, especially when the wheels came off. Down in here, it was quite the move. Now, if you do project out into space and you like to do that stuff, you'd have to rally. In other words, if this top doesn't hold here, if this doesn't hold, you're never going to make it back to there for sure. And without over analyzing this thing, if you go for the internal structure points, this is the weekly, and you are coming near the end of the year, so I think there's going to be a lot of money probably be moved around. This top, if you're looking for, there's less places to hang your trend lines on close, so all roads lead to a better vector point on analyzing the market from a standpoint of tops become bottoms. Now, the argument to go long here is you're coming back into this cradle here, you hang one more off of this doge, you hear I'm coming off of this piece. So it's not to say you can't plunge down into a deeper vault of price here, but as long as you got this 20 pip grid running, you know about how many pips you could possibly make here. Selling here, after a big move like that, it may work out, but it's always going to be about, if you fix this, you're always going to look to enter on a smaller time frame, unless you want to put a 300 pip stop on this thing. And when you go to the smaller time frame, it's immediately obvious that you probably want to think about buying 20 pips deep for a 10 pip bounce with a 5 pip stop. And as this thing kind of comes to a pause here, it may just be in for the retracement of its life all the way back to here. It's going to cut right through that. So we could just come, and a short squeeze would be a situation where we have to come all the way to here. But a lot of people are going to come and sell here, so maybe you have to come back into this, and then it's up. But you can make a fortune if you're trading big on these entries in this world. But yeah, it is interesting to look at the large time frame there, because this euro dollar, I guess from the fundamental standpoint that every country in the world is trying to race to the bottom, and as they demolish a currency, well, their exports go up, because it's just people making stuff, and if you can get a deal on something, what do you care? What do you care about the? You really shouldn't care, right? I mean, it's like, hey, those. If all of a sudden toasters were on sale, of course that's what the Chinamen were able to do, is say, hey, I'll make it cheaper. Well, of course, and nothing wrong with that, because who wants to overpay? But yeah, coming into tomorrow's market, it's going to be, and here you can do a channel here. All right, so you got the this price point, you got this thing, but yeah, sellers probably are going to come in for a little bit here. I mean, these are very just, of course, on this time frame, everything's pretty subtle. You're sitting on a 15-minute chart. So in the 4-hour world, let me just take a look at the 4-hour. Then a 4-hour world is, I never really liked the 4-hour charts, because it depends when the 4 hours is up. But you can certainly see the structure points here. So I got to turn off the chart shift because I lost my rear view mirror look here. Okay, because looking back here, this was the big situation where all of these support levels here were taken out, and the one that really cut through pretty wickedly. And of course, this was one of those things where you couldn't just put a sell stop in there because they would have trapped you and ripped you back about 40 pips. So unless you had a 50 pip stop on getting in here, not good. Now, had you got in on the first, on the sell side, the first structure break point was here, you sliced through that and it never looked back. But the cheapest place to get in was on this breakthrough here if you're a stop entry person. And here was the this 4-hour chart, so obviously there's on the 15 minutes there's probably a double bottom living inside that bar. But yeah, we're down here now. And can it tank with the same velocity? I don't know. It's going to be certainly easier to trade next week from a range trading standpoint. You got to figure there's some chop coming now. If you go to the 1 hour, it's kind of easier to trade now. Easier to trade after a big move like that because all the pressure, they popped the balloon here. So you're thinking more of if this thing is going to go up, it needs to accumulate, and that's a tradable on a 5-minute chart. It's possible to make money off of the choppiness, and then when it takes off either direction, that's typically when the next session opens or news comes out or something like that. But yeah, it's quite a fall down the stairway there. And on the monthly, just take a quick look at the monthly and try to do some type of analysis here. It looks more like accumulation, and in this situation, it's like, wow. I mean, there's real free fall there. Move this guy over. There's really nothing to the left here until you get down to this top. It's about 99 cents. But the weekly channel target's a lot deeper than that. But I don't know. You know, it's just certainly I would be a buyer at 99 cents. I just don't think you're going to get filled on a buy limit down there on Sunday night or Monday morning, or what do you want to call it. Here's the quintessential structure reversal point here. This big monster top with the big wick becomes the bottom, and then it's off to races. But I don't know, maybe we're going to have to go through this whole discount phase now on the euro. And if this is the doji, it is on a yearly chart, this would be a doji. So this whole year, almost this whole year, you've been range bound on the euro. And the year's coming to an end. And this was the sell limit that never got filled if you're trying to get in an exact structure point there. Here you got filled. And that's why on the weekly chart there's a double bottom probably right there. But that window there, and then there's a big vault. Of course, if you take out this low here, it could be a screaming fall down to the bottom, but don't forget these are typically traps. So what you'll get is a situation where they come down, they make a new low, but then they grab and it goes up. And that's like here. This is the I'm sure a lot of people said, wow, if it takes this out, I mean, they're looking at it just cleaning house all the way down. But it doesn't. It grabs them and it rips it. Same thing here. A lot of people are like, you know, and I'm sure the newspapers were like, the euro's going down to par. Every news headline on these moves were the euro's going to par. The euro's going to par. The euro's going to par, especially here at 104. The euro's going to par. Which is about right here at this thing. It's about 90 right there. And that is the big that was the big launching point. And back in 2000, in the year 2000, it was 84 cents. So yeah, we always come back to the retest. And but yeah, that euro, what punishment. And this could just be the pause. I mean, this is certainly the place that was the great retrace. But if this thing's ever really going to get the party started, You need to go sideways for a while and then up. But a lot of people are just going to get the hell out at 122. And the whole time this is going up and down, you know, this is why I would never pay attention to the fundamentals of, like, how's that country doing? It just wouldn't matter, because you can see it right there that it's utter confusion. The chart's telling you everything you need to know about the attitude of what people think about a currency. It tells you right there, especially dojis are considered to be indecision, and it's just painfully obvious that when the market's all choppy, people are confused. But of course, it doesn't. The confusion here is so broad-based that this is incredible amount of indecision here. And then finally, I guess you could say finally it goes down, but look at all this indecision. On and on and on. And look at this, just like, oh my God, when market gets quiet like this, wow, that is scary. Like, anytime it gets too quiet, even here, quiet, and then, wow, one more plunge, takes out that, really does trap the bears, because then they rip it all the way back into this. Anyways, that's my long-term, short-term view of the infamous euro dollar, not to be confused with the other currencies.